we want to create a platform where real world assets can get brought on chain and you can trade yield on government bonds, or you could sell yield from your rental property for a year, or you could, like, a farmer could sell the yield on his crops for a year or something like that. Like, we want to create a platform where real world assets can get brought on chain and you can trade yield on government bonds, or you could sell yield from your rental property for a year, or you could, like, a farmer could sell the yield on his crops for a year or something like that. Like, cool stuff that can happen with a blockchain is things can automatically happen for users. You can set something up as a user, like swap this amount of tokens every block for 100 blocks, or these kind of things, and this will all automatically happen by the blockchain. Part of that means that you're automatically connected with all these other blockchains
that is optimized for interest rate swaps. We hope you enjoyed the episode. All right. Welcome, sir.
Yeah, we appreciate you coming on. So we have Ali, the founder of Pryzm, on the podcast with us. Welcome, Ali. We appreciate you coming on. Man, it's been a wild couple weeks in crypto, as always. What do you think about the market conditions right now with some of the, I think, we're starting to see, maybe, a little bit of a local top. I think a lot of people probably feel the same way, but I don't know, man. Every time I say that, I look at the inflows from, like, the Bitcoin ETF, and it changes my mind. I keep going back and forth. What do you think?
I'm probably the wrong person to ask, because I tend to know my weaknesses as a short-term trader or having short-term views, and so I'm very much dialed into the long-term view that I have, which is still extremely bullish on crypto, DeFi, generally what you can do with the technology. And so I have a long-term secular view that is just being reinforced by the things that have happened this year. So I don't pay too much attention to the ups and downs, because I'm a terrible trader. I'd give myself anxiety. I'd have sleepless nights. So I, made my bed, which is take a long-term view and build a product and launch a product that is going to be part of that long-term view. And so that's probably as much as I can say, that without offering some unhelpful insight to people about what they should be doing with their candlestick charts.
Well, I'm glad there's one sane person in this room, because I'm the exact opposite. I'm like, I'm biting my nails every day. But let's talk about Pryzm a little bit. Maybe, I guess, before we get into that, can you touch on yourself a little bit? Maybe a brief background on how you came across crypto, and maybe your background before that.
Yeah, so I guess the most relevant stuff about my background is that I used to work in TradFi. So I used to work in fixed income and derivatives. So all my experience is really trading debt, government bonds, credit derivatives, which is kind of options and swaps and these kind of things. And I did that for a long time at JP Morgan, and then in the later part of my career I moved to Goldman Sachs and was doing that. Always had a big interest in fixed income and debt and trading of those. And so I'd been following crypto loosely, but never got that excited about it. Hadn't kind of, for me, but just from my background, I always prefer things with cash flows. And 2020, you started to see real cash flows coming out of products. So it was a bit of a eye-opener for me and revelation that I could stake a token, and it wasn't just I was receiving proof of stake rewards, but I was actually receiving actual revenue that the blockchain was generating. And that kind of really was an eye-opener for me, because I was like, well, if these actual tangible cash flowing assets here, then this is a real product with some value that people can hold, and you're generating value from usage of these assets. So that kind of led me down a rabbit hole of thinking, okay, how do I get involved in this? What do I want to invest in? Like, what cash flowing assets do I want to invest in? But also, what's the chance to kind of start building something in the space? So I naturally gravitated more towards kind of borrow lend protocols, and it piqued my interest about interest rates, depositing, etc. Like, all of the things you're starting to see with Aave, Compound. It was Anchor protocol on Terra as well. And then with my own experience, I was like, well, look, if you're starting to get yields in DeFi, then the next logical step for me was like, okay, well, in TradFi you have it's an absolutely huge market, trading of yield swaps, yield derivatives, like everything. So I started to think, okay, well, yields can be so volatile in DeFi. Like, so one day you're in a farm and you're getting paid 5,000% in your farm, and then the next day, like, a load of people have aped into the same farm and you're down to 100%, and then the next day you're down to 5% or something like that. What if there was something where you were able to say, okay, well, I'll sell you my yield for this farm for the next 6 months or something like that, and someone might not pay you 5,000%, but they might pay you 1,000%, 500%. You might be like, well, that's a great deal, and that's kind of like a little mini version of how the interest rates markets work in TradFi. And so that was 2021, and then I reached out to people to do with the Terra blockchain who probably can't be mentioned now, and they were super helpful and super supportive. And I was like, well, look, I'm someone that has a lot of TradFi experience, but I don't have any builder or developer or software experience. And they were like, well, look, we have loads of people that have and are in touch with loads of people that have great developer experience, but don't really have an idea or don't really have a concept. Like, we'll match you up with a couple of people that are doing that, and you can try and build this thing. So I started from day one knowing absolutely nothing really about the inner workings of blockchain. Like, I knew from a user perspective how I was using it and why I was excited about it, but like, how to actually build with smart contracts, what their capabilities were, what their limitations were. And so I started doing that. We ended up building a version, a very, very kind of prototype version of yield trading, and launched that on the Terra blockchain in 2022. And that was right before the May crash in 2022. So the protocol did really well, got up to 800-900 million TVL, and we were sort of in the middle of launching it and building a really great community. And then obviously the implosion in the Terra blockchain happened. And so really kind of went back to the drawing board after that, and was sort of at a stage where we're like, okay, well, we've launched a product, we have familiarity with that, we have some scar tissue now from what we've just experienced, where we had all our eggs in one basket on the Terra blockchain, and that didn't kind of work out for us. We weren't able to build the product we wanted to because of the limitations of building with smart contracts. What should we do? Do we want to get stuck in and rebuild this whole thing? Do we want to pack up and leave crypto and think it's a scam? Or, really, we were sort of in that situation. And, a couple of us from the team were like, no, we're going to give this a proper shot. We're going to build the product that we want to build, not the product that smart contracts tell us that we can build. So that led us down the path of building an app chain where everything we built is using the sort of core logic of the blockchain rather than smart contract languages. So we started building that in 2022, and it's building a blockchain from the ground up is a mammoth task, and particularly when you're not just building a blockchain so that you are encouraging other dApps to come and build on you, you're building an app chain, which is a blockchain with unique application functionality on day one. And Pryzm has a lot of features out the gate that it's going live with. And so that's kind of, where we've got to and what's brought us to kind of where we are now.
Yeah, no, I mean, it's good context. I guess the question that comes to my mind, about some of the things you said about the architecture, right, and like the limitations of smart contracts. Like, what are some examples that maybe you guys saw that you felt like smart contracts were kind of constricting you on, that like you wanted to add on like the user experience side, but obviously you couldn't do that with just a cookie cutter smart contract model. Give us some examples of that maybe, and like how are you guys architecting this? Where I think I think from a user perspective, like I think a lot of users like the smart contracts. They like the blockchain because it's it's an immutable ledger. Everything's transparent. So how are you guys thinking about like marrying those two worlds where you're accomplishing features that you want to accomplish, but you're also kind of keeping that core like ethos of DeFi, right, and blockchain in the mind's eye.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, and non-liquidatable loan. Deposit your assets and access your future yield now. Available on Mainnet, Optimism, and Arbitrum. Head to alchemix.fi to get started.
Yeah, I guess the way to think about it from a user experience is like from a user perspective, they will still sign transactions in their wallet when they want something to happen. That will send a message to the blockchain. The validators will decide whether to include it in the blocks. And then the process for a user is very similar. Cool stuff that can happen with a blockchain is things can automatically happen for users. You can set something up as a user, like swap this amount of tokens every block for 100 blocks or these kind of things. And this will all automatically happen by the blockchain. It's not something that requires more signed messages to get sent for it to happen. That's like, so from a user perspective, they will have way more features, but they won't necessarily, there's no extra friction or any difference from their kind of like actual interactions that they'd have with the platform. Like what I would say, the main kind of differences are when we built our first iteration, our first kind of like prototype product on another blockchain, the assets that we could use on in our project, we were restricted to only the assets that were on that blockchain. We were in no control of what assets got bridged over to the blockchain. We couldn't send an asset from our blockchain to another blockchain. We couldn't collect yield from another blockchain and send it back to our blockchain. So all of these things kind of put a real cap on what you can do. And so for us, ultimately, we want to build a completely scalable product. And the aim for Pryzm is not just to mess around just with DeFi tokens or proof of stake assets. We want to create a platform where real world assets can get brought on chain and yield can get traded. Like you can trade yield on government bonds, or you could sell yield from your rental property for a year, or you could, like a farmer could sell the yield on his crops for a year or something like that. Like all of this can be brought on chain. And if you're in control of your stack, then you're able to do that. If you're in, you might have some of these assets that require KYC or compliance for people to be able to trade them. If you're in control of your stack, then you can tag which wallets, the users can tag which wallets, or distributors can tag which wallets they want to be able to interact with that, which pass their KML or AYC checks if they want to. But the aim is to build a product where people can then come use it for whatever yield. And like, we're not going to focus on what people will want to do in 5 years' time or try to guess what they're going to do. We're just going to try and build a product that can cater to all of that. And it will, we'll start off doing proof of stake assets and other interesting things that there's good consumer demand for. But the sky's the limit in terms of what assets can be done when you're sort of building with your own blockchain. So there's that side of it. And then I'd say also there's the being vertically integrated. Just as I mentioned earlier on, like if you're a user and you want to use our app and we're just smart contracts on another app, if ETH gas spikes or the network goes down on Solana or any kind of like innumerable things that can happen that you're out of control of that are no fault of your own, but completely cripple your app in the interim. If you're vertically integrated, you don't have these issues that are out of your control. You're responsible completely for your stack. Like the Terra implosion completely wiped out our previous version. That wouldn't happen here because we're now our own blockchain. So I think that's kind of the main thing. And I think there's a lot of rent extraction going on in DeFi generally at the moment, where or crypto generally is one of the most super powerful things in from a philosophical point is the barrier to entry is low, which makes it an amazing innovation, and why everyone in the world is able to participate if you have a smartphone. Because there's low barriers to entry, costs, I think long term are just going to come down and down and down for people to do things. So to be vertically integrated and start means that you're in complete control of your cost stack. Whereas if you're not vertically integrated and you're outsourcing your Oracle to someone else, you're outsourcing your security to someone else, you're outsourcing your data availability to someone else, you have all these rent seekers that kind of need to eat before really your profits at the bottom line can go to token holders. So, but that's kind of the main things. It's vertical integration, sovereignty, and functionality and technological capabilities that you can have with blockchains.
Yeah, I think what you just touched on there too is, and I think I like this about the model that you guys are laying out is it's obviously you're building it for the present, but also for the future, right? If you think that if you think like Larry Fink thinks, and tokenization is going to kind of like eat the world, right? And you want to build a platform that's going to be able to serve like all of those assets, and I think that's something, that a lot of users might not see, especially when it comes to, let's talk about RWAs for a second. Some of these RWA platforms, these tokenizers that are coming online, it's not like you can just show up as a regular user and just go interact with it, right? You have to go through that KYC process. Some of them you still have to be a qualified buyer, or a qualified investor to even start the process, right? So if you're building out these rails where you can serve like those different sectors all from the comfort of your own app chain, I think that's that's a compelling business model at the end of the day. So let's talk about, I'm interested to hear, I guess, a little bit more about like the go-to-market strategy too, with the platform. Obviously there's this long-term vision, hey, we want to be able to provide yield swaps for everything, from the chain, other derivatives possibly, but like what assets are you focusing on initially, and how are you bridging the gap where like, I think there's a lot of assets right now that are hot, from I guess I don't know if you consider them interest rate swaps or not, obviously, but like, let's take Pendle, for example, right? Pendle's caught fire recently because, you're not only, I think, speculating on just yield, you're now speculating on these airdrops, right? And on these points. So I'm still undecided on whether or not it's actually like the interest rate swap that people are interested in, more or less, or is it the airdrop farming? I think it's the airdrop farming, right now. But those assets obviously exist on Ethereum, or they're on another L2. How are you guys going to bridge the gap where you're going to be able to access all of these other assets, and make it a compelling user experience for users to come to Pryzm and transact?
Good question. So I think the Pendle use case, like they've done amazingly to find product market fit with tokenizing points, tokenizing airdrops. Like I think it's been very cool to watch that catch fire. I think in terms of the assets, like the initial assets that we'll end up having is a factor of our blockchain is built using the Cosmos technology stack, so the Cosmos SDK it's called, and we part of that means that you're automatically connected with all these other blockchains that are built with similar stack. So that connects us to Injective, that connects us to the Cosmos Hub, so Atom, that connects us to Celestia, Dimension, Osmosis. So Saga, there's going to be like Berachain, Initia, all of these kind of like big launches coming up as well. So the demand we've seen from community so far is that they have no way of monetizing these assets at the moment. They historically have much higher staking yield, or monetizing yield on these assets that historically have much higher staking yield than, say, ETH at 3% or Sol at 5%. You've got Atom at somewhere between 15 and 25% over the last year. Osmosis the same. Like these kind of things. Like people want to monetize their staking yield, and so those are the assets we're going to focus on. I think the main way that I at least look at it just is what's the market cap of the asset, what's the yield of the asset. That's kind of like gives me a kind of like very back of the envelope look at which assets we probably should be focusing on. But the cool thing about it is like anyone can apply for any asset to get listed, because as long as the asset can be bridged to our chain, it can be enabled for yield trading on Pryzm. So obviously you've got IBC, which connects all Cosmos chains, so that kind of like default makes it very easy for assets to get bridged. Then Axelar and Wormhole have their own Cosmos chains as well, and they're probably the two most preeminent bridging providers. So getting an asset bridged over from Sol or ETH, is very easy. There's already Lido's staked ETH in the Cosmos. So people, if they want to trade ETH yield for Atom yield or swap Osmo yield for ETH yield or something like that, they're going to be able to do that. And Solana as well, like Sol LSDs, you'll be able to trade yield on. So when we start, it's hard to think of assets that you won't be able to trade yield on, really. As long as there's a bridge from that chain to the Cosmos, you should be able to trade yield on it. So the market will get to decide what it thinks is most interesting, and projects, as you've seen with Pendle, projects will come and say, well, I'm suddenly seeing the benefits of getting my assets enabled for yield tokenization. I'm going to put in a governance proposal to get my asset listed, and we've had quite a lot of incoming from people that are or projects, big projects that are super interested to do that when we launch, which was unexpected. But I guess given the kind of trends with Pendle over in Ethereum, like it's definitely catching on.
It does. Yeah. And I wanted to touch on something you just said, just to clarify. So, and correct me if I'm wrong. So Pryzm is going to enable me to like bring one yield bearing asset and potentially so let's say that the Atom and like the staked ETH example, if I'm looking at my assets, I hold a lot of Atom, but I want to get exposure to like ETH yield, I can bring my Atom as collateral and like swap that for ETH yield. Am I following that?
Yeah,
right?
Exactly. You might bring 100 Atom over, for example. An Atom might be yielding, say, 10%. So you have 100 Atom. Over the next year, you're expecting to earn 10 Atom on top of that. So what happens in Pryzm is you can tokenize up that right to that future 10 Atom that you're expecting to receive, but yields can change. So it might be more, it might be less. And you might go into the market and say, okay, well, that right to receive what I expect to be 10 Atom, someone might say, well, I'll pay you 8 Atom for it right now, or something like that, or I'll pay you 8 USDC or whatever the USDC equivalent price is. But then you could just swap that yield straight away for ETH yield for a year's worth of ETH yield or something like that. So suddenly you've kept your Atom price exposure, but you're now going to be earning ETH yield for the year. And then at the end of the year, you have your stack of ETH that you've earned from the ETH yield, and you get your original 100 Atom back. So it allows you to suddenly do these swaps and decide what's your ideal investment strategy. What does your ideal portfolio look like? Which assets do you want to be earning yield on? Which assets do you actually want to hold for a while? So people are now going to have a lot more choice about which assets to trade and how they can make money or how they can hedge, and it giving people more opportunities is a good thing, I think.
Yeah, no, that's really interesting. I think the next question that kind of comes to mind too. So what kind of mechanism are you guys using for the yield swaps then? So is it like an AMM like Pendle, or do you have some kind of an order book model? Like what model have you guys elected to use for facilitating the swaps?
Yeah, so that's another reason. That was a big reason as well why we ended up going for our own blockchain. So taking a step back, in traditional finance, how do these products trade? Some of them are super liquid. They will trade billions and billions of dollars a day, and it's absolutely fine. Some of these products, like longer tail products in TradFi, if you want to do a decent sized trade, you need to leave an order, or you need to TWAP your trade, which effectively means just sell it slowly and get an average price for your trade, so that you don't get one monster giant wick on on the chart or whatever. So like to create a market where these things can trade properly, we need to give people the same tools that they have in TradFi. And so we have an AMM specifically dedicated for yield products. It's very different from Pendle's, because in Pendle you have the liquid staking derivative paired with the principal token. And then then you'll have another pool, say it's for ETH, and there's 2 different maturities. You'll have another pool with the liquid staking derivative and the new maturity of ETH and that. So for each maturity, you have a new pool, which is working really well, but can fragment liquidity. Whereas with Pryzm, you will have one pool that contains multiple assets, like a balancer style pool. So you'll have your liquid staking derivative, and then you'll have the first maturity, the second maturity, the third maturity, the fourth maturity. So it might be 1 year principal atom, 2 year principal atom, 3 year principal atom, 4 year principal atom, all in the same pool. So you can swap between any of those and swap to the LSD very easily and then route through all the pools as well. So there's that, which should increase capital efficiency a lot. It should also mean that as all trades happen in that pool, liquidity providers earn fees anytime the trade happens on that pool. So they don't need to pick which pool they want to allocate to.
This episode is brought to you by Pendle. Pendle is the market leader in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing asset in DeFi, while creating an avenue for users to express their views on future yield or earn a fixed rate with their assets. Learn more at pendle.finance.
The other benefit is that in a pool where there's only 2 assets, if one of the asset matures or expires, so it gets to its maturity, no one's going to be trading in that pool because it's an expired asset. So you need to manually withdraw your liquidity and go and provide liquidity to another pool if that's what you want. With these multi-asset pools that we've created, your liquidity never needs to get taken out. You will always have all of the maturities in there, and the pool itself takes out any expired assets and adds in the new assets. So from a liquidity perspective, it's a lot easier, and from a trader perspective, it involves, it means more capital efficiency and hopefully less price impact. And then, I guess to sort of complement that, we've built a TWAP and DCA module into the blockchain. So if you have a really big size trade to do, then you can set that trade to execute a certain amount every single block for 5 minutes, 10 minutes, a day, a week, whatever you want. So you can spread your trade out, and that kind of like minimizes the price impact of your trade. And we've seen some implementations of this stuff in DeFi. Things like ThorChain has streaming swaps, which are doing amazingly well for people that want to trade really large size in Bitcoin or ETH or whatever. So it's kind of it's our version of a TradFi TWAP, but because it's built into the blockchain, it has a lot more features than, say, for example, ThorChain streaming swaps. And then the final trading tool you have is what we call flow trade, but it's effectively like a gradual auction. So rather than it getting sold bit by bit to the AMM, you'll say which asset you want to sell. You'll say which asset you want to receive. People will deposit the asset that you want to receive. You'll deposit all your asset that you want to sell. And then over the time period that you choose, there'll be like a slow auction where assets are transferred from you and transferred to the people buying. And so that allows you to kind of like set your limit price, set how much you want to sell, like smooth out the whole process. So the aim is to give people these trading tools to be able to execute decent sized trades.
Yeah, I like that. And the reason why is because, at least in my opinion, I'm thinking about who's the ideal user of, using an interest rate swap, in the traditional world, right? It's not Kirk with 50 USDC, or 50, $50 worth of ETH, the yield that I want to trade, right? It's going to be, your larger firms with larger balance sheets, larger portfolios, insurance companies that hold a lot of T-bills that might want to, put in for a swap, these kinds of entities, like you have to be able to execute with near zero slippage, right? And I think that, the AMM model, that's one of the drawbacks, right? Is there is slippage, and you need a lot more liquidity, for an interest rate swap than I think people realize. It's not the same as your trading spot, so you need a lot more depth when it comes to these things. So it's good to see that you guys are already building in features and kind of, I guess, leveraging your tech stack to think about those things, because that's definitely going to be an important topic as we try to scale the industry.
Yeah, couldn't agree more. I mean, like it's a case of the great thing about DeFi is it democratizes access to everyone, but you want to create tools that are really easy and user friendly for retail who might not have been exposed to yield swaps before, or might take a little while to understand like how exactly it can benefit them. But then you also want to create liquidity and expert level tools that the largest institutions are going to be able to find useful. So that's what we're trying to do, hopefully.
Yeah, it makes sense. So with all of these features, on the app chain, so it sounds like there's a lot of customability here, right? You're talking about being able to place, TWAP orders, there's a lot of there is a governance aspect of it from what I understand. I want to touch on that in a minute, but how about the maturity periods? As a user, can you choose whatever maturity period you want? Like I know, we're talking about Pendle a lot here, but even other AMMs, right? They kind of curate that. They're like, hey, we're offering a 1-year pool, or a 6-month pool or a 3-month pool. Can the user submit that as an order when they come in? Like, let's say I just want to do a yield swap for 15 days. You know what I mean? I'm bearish on this yield for 15 days. Let me get my my fixed, in before something happens. Walk us through that a little bit, or will it be more of a limited, I guess?
Just from my background, these like hand-picked or sort of cherry-picked maturities is just not how it works in reality. So like, in kind of TradFi reality, the way it works is like, what you will have for assets is what's called a yield curve. And that's like, if I'm Apple, borrow some money for a year and I have to pay 3%. At the same time, I borrow some money from 2 years and I have to pay 4.5%. I borrow some money for so on and on. I borrow some money for 5 years. I borrow some money for 10 years. I have to pay more to borrow for a longer period. And, that gives you this yield curve where like the longer I borrow for, in normal situations, the more yield I'm having the more interest I'm having to pay. So you create this kind of like yield curve for assets. So for something like Apple, it might have 3, 4, 5 different maturities every single year up to like a 30-year bond, for example. But for a more, for a smaller company that's maybe more illiquid, it might only have 3 different maturities, a 3-year bond, a 6-year bond, and a 8 or 9-year bond or something like that. So in Pryzm, when you come to list an asset, say you list ETH, for example, you will say, governance will say, we want to list ETH, we want to have X amount of maturities a year, and we want those to carry on for Y amount of years. So if you say, I want 4 maturities a year, and I want it to go on for 5 years, then that will give you 20 different ETH maturities that can be traded. And so it will carry on, like as one maturity rolls off, a new one will get created and automatically added to the liquidity pool. But for example, there's some degen farm going on that, clearly doesn't need a 5-year yield curve. People could be like, okay, well, we'll just create one, we'll vote and create one pool here for just one maturity for this, this degen farm going on. So it's creating a scalable product that can work for the highly liquid spectrum, where there needs to be a long yield curve, and the long tail illiquid assets where there's something interesting to do in the short term, but not over the long term.
Interesting. Okay, that makes sense. So I guess it's a good time to segue then into the, we're talking about governance here, right? I'm assuming that the Pryzm token, will have a role within that governance. Maybe walk us through that a little bit. Like, how does the governance work? Is there a fee sharing aspect of it as well, as far as utility for the Pryzm token? Like, where does that play a key role in the ecosystem?
The Pryzm token basically controls everything from a governance perspective. It controls which assets get listed. So if a project wants to seize the benefit of yield trading and tokenization, or some new project wants to do their airdrop launch using points, yield token points farming, like's happened on Pendle, they will need to make a proposal, and Pryzm holders will need to pass that proposal for the asset to get listed on Pryzm's blockchain. So they control that very entry level kind of piece of it. And I think like that makes it super interesting, because then there'll be some lobbying from people to other people to try and get Pryzm holders to vote, and you'll get that kind of like that kind of dynamic. And then the Pryzm token also controls all the parameters on the blockchain. We've just been preparing our Genesis file for all the different parameters we have. There's like hundreds. The Pryzm token holders control all kinds of things like revenue share, like how much gas is, all of these kind of, where does yield get redirected, all of these kind of things. So that's kind of like what Pryzm controls. And then, one of the unique things, I guess, about Pryzm, maybe compared to other protocols or other blockchains, is that all the revenue earned by the blockchain, which boils down into, I'll try and remember them all, but like if I'm just a normal layer 1 blockchain, people pay network fees or gas to use the blockchain, and that's kind of like my revenue source. with Pryzm, you have, because it's the blockchain, you have gas and network fees. You also have a module which captures MEV revenue. So an MEV revenue is just the revenue people will pay in order to get their transaction ordered in a specific place in a block. So, normally top of block or end of block. And so that's kind of like extra revenue that Pryzm holders can earn. Pryzm will take a share of the yield of all of the yield assets as it refracts. Pryzm also creates LSDs, so it's going to earn a share of the yield from the LSDs. There's an underlying AMM and TWAP and gradual auctions. Pryzm holders earn fees every time someone does a transaction on one of those. All of that good stuff ends up going into one module called the Treasury module. So in that Treasury module will sit all of these different bits of revenue that have been collected in loads of different tokens. So whatever assets are listed on Pryzm's blockchain will be collected there. And the Pryzm token holders have a choice. So with a normal blockchain, for example, they would just distribute that automatically to stakers. Another protocol might just say, well, okay, well, we're going to buy back and burn tokens or something like that. But like the way I look at it philosophically is like, if I'm a company in the real world, and then my company makes profits, or the company makes profits, or Apple makes profits, for example. Apple makes cash flow. Apple gets to decide what does it do with that cash flow. Does Apple do a dividend? Does Apple do a big share buyback, which is effectively buyback and burn? Does Apple take that money and put it into the community pool, or whatever the TradFi equivalent of the community pool? Does Apple take that money and put it into its retained earnings and save it for a rainy day? Like, what does it do? So like Pryzm holders have that choice. The revenue's all sitting there in the Treasury module. A lot of it will be already earning yield and accumulating anyway, because it'll be yield-bearing assets in there. And then Pryzm holders can decide, do we want to use all this revenue to buy back Pryzm tokens and send them to staking rewards? Or do we want to use all this revenue to buy back Pryzm tokens and just burn the Pryzm tokens and decrease supply and make it deflationary? Or do we want to buy back Pryzm tokens and send them to the community pool to spend on cool initiatives? Or do we just want to do nothing and let the treasury grow and accumulate, and we can decide what we want to do with it later on? So it's like, it should be good for Pryzm holders, because they have a lot of choice, and they can decide, whether they want to take sort of short-term profits and get stuff paid out to themselves now, or whether they want to, accumulate and prospect for the future.
Yeah, I mean, it's interesting, and I think it does create, a very interesting flywheel effect, right? When you have, obviously, fee accrual, to the token potentially, but obviously that the governance bit is very important, in the ecosystem, right? If it's controlling like essential functions, like, does the token even get listed, for swaps, the fee mechanism, all that. I mean, I think it makes token holders feel powerful, right? And I think at the end of the day, that's a good business model, for at least in my opinion, but I'm a terrible investor, so not financial advice. So yeah, just I think it's coming up on a good time for us to probably wrap up. But before I do, is there anything you want to share maybe with the viewers, on what they can look forward to on Pryzm? Any kind of launch dates or campaign dates coming up or anything like that, and where can they find you to follow you on socials?
Yeah, I am. I'm at Mr Refractor on Twitter. I'm not sure why that's happened, but it is what it is. And so in terms of what can people expect from Pryzm, we've been heads down building through the bear market. So we've been very much focused on technology, and now I think it's time for us to really start rewarding the community that's been sticking with us for so long whilst we've been doing this. We are now, we're coming up to a huge milestone for us this week, which is the first ever block of the Pryzm blockchain is going to be produced this week. So we're going to have our Genesis event in the next day or two. I think then we're going to have I'll take a high five after it's done. And then we've got a private, or not private, like a power user. So some of the public that have tested out the product in testnet and given us really good feedback, they're going to come make sure it's all working absolutely perfectly, and we're going to get all the kind of plumbing and connections in place that we need to all these other blockchains to be able to transmit yield everywhere. So that's kind of like a 2-week process, and then there will be a a big points campaign for people to come and to reward kind of like early users that come over and explore Pryzm, explore its capabilities, use it to tokenize yield and trade yield. And then so we got that, and then lots of fun stuff for our community as well. So meme coins, NFTs. We're going to be rewarding people with some tokens that they can come and try out yield trading on without necessarily needing to risk their own money. But they these tokens will have a real value, and it should be some good fun stuff coming for people. So if they want to learn more, like info.pryzm.zone is the place to kind of see all of our major links. Come join our community, and we're super excited to engage with new people.
Awesome. Well, I always say you're not a proper blockchain unless you have meme coins. I think that's
exactly.
I think most people agree with that in this industry. So, well, hey, we appreciate it, Ali. Thanks for coming on. It was really good to learn more about what you guys are building, and we're certainly really excited to kind of see it play out in the market. So we'll talk soon.
Yeah, thanks very much for your time. Appreciate it.